Welcome to this week's episode of Your Stock Request for the 9th of January. Hi, I'm Michael Gable, Managing Director of Fairmont Equities. Your Stock Request is a weekly video where I take your requests and analyse the share price charts. So this week we have Treasury Wines, Fortescue, Midway, Arafura and Calix. So if you have a request, send it through for next week. Make sure you have signed up to the weekly newsletter. Make sure that you share this video on social media if you enjoy it, and if you really do enjoy it, we'd love to get a review from you on Facebook or Google. And finally, remember, any advice here, of course, is general only. So this is Treasury Wines. What we'll do is we'll move to a weekly chart. So clearly, in the last few months, there's been a bit of a rejection of the old high. So initially it rejected, went to consolidate, but after trying to have another run, comprehensively sold down. So obviously the shares don't deserve to be anywhere up at this level at the moment. There does seem to be some support at sort of $16. Looks like there's been a turning point there a few times around. But if we move to a daily chart, we'll see that it is oversold on the daily chart. So we may well get a bit of a bounce here. However, I think 1750, that sort of zone, maybe just a bit higher, will be resistance for it. So it's too early to say whether it can get through that. So short term, bit of a bounce, but not really much upside. Okay, with Fortescue. So we've covered this one a few times. I think the last time might have been back here, where we noted the nice consolidation under the July high, and then obviously it made the breakout, retest, and has kept going. In terms of the shorter term, we've got this bit of a pullback here, but it's only a fairly flat correction. So we can see quite a big move up here, and the pullback's just, as I said, fairly flat, so not very convincing on the way down, which is a bullish sign. So if we switch over to the weekly chart and zoom in, so this is where we are now. This is the old high near $12. So I think Fortescue is clearly on the way towards $12, but to push through an all-time high like that won't happen straight away. So I think it'll get close to that $12 mark, and then we'll see a decent consolidation to see if it can get ready to push to new highs. Okay, this is Midway, MWY. We'll look at the daily chart. As we could see over the course of the year, it's pretty terrible. Shorter term, we can see that after bottoming out there at the end of October, that bounce has been fairly feeble, and since then it's just been drifting back. So we're now seeing, so I'll zoom in. So we're now seeing lower highs, lower lows, so it's not a good sign. So this is on course to, at this rate, just drift lower. Obviously the old low here, $1.80, it's going to retest that. So whether it can test that, bounce nicely, or just suck in a lot of sellers and push it below that, I can't say, but for the moment, shorter term, it's at least going to head back to that level. Okay, Arafura. So what we've got here is there was a good bounce there a few months ago, 6 months ago, and then it's just been heading sideways. So it's a fairly flat consolidation there. So what we'll do is, so as we could see, nice move up, consolidating that fairly sideways in this symmetrical triangle. Now we just need to see which way it breaks, whether that's to the upside and you can follow it, or to the downside and it's something to be sold if you're in it. In terms of most recently, it's had this drop here in the last few days, and volume was actually sort of starting to tick up on the way down. So a little bit of a concern. So I wouldn't necessarily be buying it back at the bottom of the range here. I think we just need to be patient and wait for a clear breakout to the upside. And obviously, if that were to occur, you'd get a fairly substantial move out of Arafura. And finally, Calix. Look, as we can see on this daily chart, it's not very liquid. And in terms of volumes traded yesterday, you know, at 77 cents, we're looking at about 30 grand's worth. So you don't want to be buying 30 grand's worth on a stock that trades 30 grand in a whole day. Super risky to do that. So you need to keep your position sizes very small. Moving to the weekly chart, we could see, look, big price rejection there at the end of last year, which is not a good sign. So a lot of volatility in this stock. It's starting to come back and settle down, which is what we want to see. So ideally, we just want to see the ranges tighten up a bit and the volatility to go. And then that would, you know, if the stock had settled down, then it'd be interesting, perhaps as a trade if it's showing some bullish signs. But at the moment, it's not showing any bullish signs. We just need to see it settle down. But if it does look good later on, just remember the position sizes need to be pretty small. All right, well, that's it for this week. Send me your requests. I'll try to include you for next Thursday.